Hello, everyone, and welcome to the MakerDAO Scientific Governance and Risk Meeting number 118, taking place on Thursday, November 12th, 1600 UTC, same time every week. Cool. My name is Slunk Wisdom. I'm the governance facilitator at MakerDAO. I run these meetings. We've got an agenda to go through. We've got some sort of weekly updates that we have, and then we have a couple of segments about various things. We've got Tim Black talking about the new community portal launch, and we've got Sam who's going to start a discussion about the DIPEG and the PSM, and then along with a regular segment from Rishesh on the state of the PEG. So general rule of these meetings, if you want to say something, please interrupt. We love to hear from you. Yeah, so please don't worry about interrupting or hurting people's feelings. Cool. All right, let's dive into it then. Yeah, I guess I'll start with the weekly governance update. I think I've covered the introduction. All right, so I'll just briefly go through governance at a glance, talk about some of the forum activity this week. So we had a couple of kind of cool active discussions. Again, kind of mostly focusing, well, not mostly focusing, somewhat focused around governance. We had a thread from Matt Rabinowitz, who's been working on some real-world assets integration stuff, talking about a perspective of an off-chain senior position lender, kind of talking about, I'm guessing, sort of his experience with MakerDAO governance and kind of how this generalizes to other off-chain lenders, which I thought was a really valuable perspective. I think people could benefit from reading it. We also had the thread from last week, governance forget about whales, originally started by PlanetX. His discussion on that has kind of continued. Kind of some useful points being brought up about various things. And then we had a kind of a thread resurface talking about why users might choose Maker over Compound or Aave or other secondary lending platforms. Again, sort of discussion just kind of covering some of the differences and like the various risks and advantages. Then it covers active discussions in terms of seeking consensus. So signal requests, we've had one new signal request this week from Sam who will, I suspect, talk about it later. Talking about accelerating the PSM launch based on some recent feedback around DAO losing market share in Latin America in comparison to USDC. So I think that covers governance at a glance. In terms of general governance updates, I'm continuing to work on governance parameter documentation. We also started looking at the kind of looking in more detail at the DSS.gov proposed changes and kind of trying to identify if any of the other proposed changes that we've kind of discussed in the wake of the Flashstone incident the other week can kind of slot in there. So I'm having to talk to Chris and some of the other devs about that sometime soon. Right, I think that pretty much covers governance updates. I guess in terms of polls, we had the MIP inclusion polls last week, or this week, sorry, finishing today. Haven't checked the outcome yet, but I'm sure Charles will let us know later. All right, I think I'll turn it over to Chris then from Smart Contracts, if you're around, Chris.
Yep. So let's see. So I'll do what I usually do. I'll talk about last week. We did the weekly executive. So Ballet and Wi-Fi A are both now collaterals added to the system. Between the GSM delay of 72 hours and the office hours modifier, that didn't happen until I think like an hour ago. So those are active now. So keep an eye out to see if their debt ceilings start to get consumed. There was also some DC adjustments for various collaterals in that spell. We have collateral assessments up for Uniswap V2 LP tokens for USDC F pair and DAI F pair. So check the forums for those. And we have GOSD-A is in Covan. With regards to some of the tooling for the executive spells, we've been working on the DSS execlib. That's in final review right now. And so that'll change probably some of the collateral onboarding documentation, which is also in final review. So, so those two things are kind of dovetailing together. And there was no collateral onboarding priority sheet work done this week. So, you know, maybe we'll hit a normal cadence again in the coming weeks. So there's a post that I'm working on and we'll post probably after this about the changes that we're going to propose for flash loan solutions in DS Chief. So we're calling that you know, DS Chief 1.2 because this is the second upgrade. There was a bug in early 2019 that was probably the 1.1. So so that post will go out sort of detailing the you know, very like minimal set of fixes that we need to prevent flash loans there, and you know what the benefits of that are. It'll also sort of walk through the migration steps, so the sort of details that are going to be part of the migration, and we'll try and cover a timeline. So spoiler for that, the timeline looks like it'll be that if you're familiar with US holidays, the Thanksgiving week, I think that Friday the 27th for Americans, or maybe even Canadians, I don't know, that's Black Friday. We'll have an executive that will go live will put in the governance fix. It'll take some time to go through, just like these collateral additions did, but so stay tuned to the forums for an update on that. And then Sam has resurrected totally on his own. You know, I think some discussions around the peg had him resurrect this PSM idea, and he's got some code to accompany it. So people probably want to pay attention to that. It's been said in ancient manuscripts that sometimes the M in Sam M stands for machine. So so thanks, Sam, for putting the work in. And then an update for I guess maybe personnel or people. So Will Barnes is no longer with the foundation. He's one of the domain team actors for smart contracts, but the good news is that he's going to be putting in a lot more hours for the DAO. So so starting next week, it sounds like we may have him on MIP 21 collateral onboarding for real world assets, but so we'll get another you know, like another good engineer that's out working in the community. So for the coming week, we've got PaxG going to Covan. In this Friday's executive, I think we're going to have GUSD, and it looks like that'll make it in time. Long, I'll reach out to you if it doesn't look like that'll make it. But, and then whatever other polling results. We're also going to try and do a collateral assessments for Uniswap v2 WBTC F pair, Uni proper, Aave proper, Ren BTC, and TBTC. And MIP 14, 17, and 25 are still in review. We just haven't gotten around to those yet. The foundation continues to sort of work on the liquidations 2.0 roadmap. We're finished discussing stuff with auditors and are reviewing the various auditors, and we'll probably make our selections pretty soon. And then we continue to work on the DS Chief 1.2 upgrade. So there's a whole path where that's going to go out to Covan. We've got to test the upgrade in that process and work with UI and UX internally to do that. So, and that's it. That's the entire update for smart contracts.
Great, thank you, Chris. Does anyone have any questions? I did have one question actually, so I won't be asked that. So we saw, I believe, MIP 20 passed through the governance cycle successfully the other month, last month. So I was wondering, I guess, what the timeline looks like for that in terms of actually implementing the code.
Remind me again which one MIP 20 was.
The 20 is the target price adjustment module from Lev, right? I think.
Oh yeah, yeah. That should. I mean, I guess we should just sort of craft that up. That wasn't really on my radar, but I don't think that it's too complicated. So yeah, we should build a you know, an executive that would deploy it, and we'll have to figure out where to slot it in. We got a lot of density prior to December, and so it may even be that we want to put it in January. Otherwise we're going to have to bundle that with like a collateral onboarding. But we should get it ready to go. So
cool. Yeah, to be fair, that's largely my fault. I think I haven't really communicated that with you recently. Like we need to start a list of like things we've approved that haven't been implemented yet, and then kind of keep that up to date.
Yeah, we need a good calendar. I think we're getting to the point where we need some sort of tooling to track priorities here. So.
Yep, I think that's a good idea.
Actually, that was what I was going to comment on, Chris, is just the mouthful that you gave of all the stuff you guys have been working on. That I just want to say great job that you guys keeping up on all this. And so great work. That was all I had. But yeah, some sort of agenda on this. Something I was going to suggest, I haven't done a post on it, is, you know, there's a lot of people doing a lot of stuff, and it would be nice to have I mean, we have like the roundup, you know, that we do, but just a place where you can see a running list of all the stuff everybody's done in the past. Like in OneHive, they use it as a check-in, but just so that people have one place they can look and see everything that's been done, like over the past 3 months or the coming 3 months.
Yeah, we'll have to talk about what you know, we use Clubhouse internally at the foundation to track stuff, but we can use GitHub, Kanban boards, and other stuff. And that you know, we probably need to start to discuss exactly what we're going to do in the community, what the right tooling would be, what people would want.
Yeah, I think I agree. It's getting to the point where there's just a lot. Go ahead, Nick.
And especially kind of as we kind of transition to this more kind of DAO-centric model, right, where there's more domain teams, in particular, right, domain teams that are external to the foundation, we're going to need a way to kind of keep track of activity, keep track of work, right? Especially if people are getting like paid by the protocol, you want to make sure that they're actually continuously actually delivering. So I agree. There definitely needs to be a lot more kind of transparency in terms of what the domain teams are working on and kind of when they kind of complete and get stuff done.
You guys are getting ahead of my update of which is the framework that we're working on, that is tied to, it's just a little bit more complicated to write in one forum post. So that's why it's been taking long, because there's a lot of kind of connecting factors, but essentially the like domain teams who propose a budget, and there'll be an introduction to something like objectives that are tied to a roadmap, like a decentral, like a DAO roadmap, essentially. We haven't gotten to the details of tooling, but I think just getting the mental model first is where we're shooting for.
Great. Yeah, thanks for that, Amy. All right, let's continue with our updates then. Nick, do you want to give an Oracle update? Nothing to report this week?
Yeah, sure. I think Chris has said everything for the most part. We're just kind of rounding out, you know, what we have, what we expect to do before the end of the year, and kind of just aligning on dates between all the domain teams on when we can deliver what. So we hope to get a bunch of the collateral onboarding assessments basically out next week. Basically what we want to do through the end of the year. So then there's kind of like a public record that everyone can look on and kind of see the progress on. on we're kind of I'm at least on the Oracle side finishing up on the Uniswap LP code, just waiting on a few more kind of external reviews and some feedback to do kind of one final iteration. And we need to add like a couple more kind of administrative functions, but apart from that, it's looking like we're doing okay. In our staging environment, we haven't really found any issues. But again, from the Oracle's perspective for the LP tokens, we'll probably suggest in the assessments that the debt ceilings kind of be artificially limited relative to what the risk team outputs for their parameters until we get a professional audit done on the Oracle code for the Uniswap LP tokens. And then as we get, one or even, more than one audits done, right, we can then gradually raise the debt ceiling as we feel more comfortable with the code. And then kind of on a personnel point of view, my team is very fortunate. We got procured kind of the services of someone very near and dear to my heart, Marc-Andre. Some of you may know him very well, and some of you are about to get to know him very well. So he's going to be joining me on the Oracle domain team, and he's going to be very visible and vocal in the community. So I'm exciting to, and he's incredibly talented. So I'm very excited for the DAO to kind of get to know him and see what he can do.
That's great news. Thanks for that, Nick. All right, let's continue on into risk then. Pramesh, do you want to give your risk update?
Yeah. RAIN BTC risk assessment was published yesterday by our two external analysts, Andrei and Yarny. Parameters that were proposed are a bit conservative, but I think they're actually quite appropriate for based on the findings of the report. Both Andrei and Yarny, and Yarny is actually a known community member for some time. Many of you should know him. So they're now moving on to evaluation of TBTC, and hopefully we can onboard both RAIN BTC and TBTC towards the end of this year, and expect some demand there since we know how popular BTC wallets are. We are also actually finalized the first UniLP risk evaluation when Supply did it. To be more specific, the first evaluation was for USDC ETH UniLP, and then plans to make another one for DAIT, which shouldn't be, of course, much different from USDC ETH, and then do another one for Red Bitcoin ETH UniLP. And then we'll probably publish all of them from our site towards the end of this month, so we can onboard UniLPs in December, as was somehow agreed between domain teams. We are also looking into dust values, mostly related to costs when unwinding of vaults or bidding in auctions when gas prices increase. We think the 100 dust might not be appropriate value, especially in times of distress and high gas prices. But there are, of course, some downsides to it. So because we might start excluding certain users, so I'm planning to make a signal post about potentially increasing dust value and addressing all of these concerns and sharing some data. And then on the real world test side of risk, the team covering real world assets should soon release a risk assessment template, which is made specifically for real world assets. So it's a different one that we use for crypto assets. Risk assessment for 6S is also more or less finished now, and was made by Sebastian, and is currently in internal review phase. New silver drop and cargo freight drop risk assessments are also in progress. These two are covered by Will and Phil. And there's also initial discussion for another potential real-world asset implementation, which was proposed by Upritz Real Estate, which is proposing sort of a tokenized real estate collateral. And that's all from our side this week.
Perfect. Thanks very much. Yeah, fair bit to unpack there. Any questions, anyone? Not very much. Cool. All right, let's move on then. Amy, do you want to do a ComDev and operational support update?
Yeah. So on the ops side, as I mentioned, kind of working on that framework to coordinate around the subset of work, kind of like a public roadmap, what that public roadmap, how to coordinate around that. And then the main thing this week has been how we can help domain teams kind of form and propose their budgets. So it's been a lot of kind of data crunching there. So forum post coming soon, which is pretty exciting. There will also be an update on another working group that I'm part of, which is Autonomous MakerDAO. I'll drop a link in the chat. So we'll be giving an update on the forum as well, hopefully by next week. On the community side, there's sort of two main things. One, we've been working with some senior contributor leads to define kind of like a fresh vision and objective for community development. So these objectives will allow wider community members to engage deeper with MakerDAO and governance. So I'm super excited. Like, I can't wait to share those with everybody. And then the other piece is a core project that this team has been working on for this year has officially launched. So I'm really, really excited and proud of the collaboration that went into this community-led portal. And Tim will be giving you guys an update and a little kind of running you through what that portal looks like. And then just like a quick ask is that there is a podcast forum thread call out, which is just to, if you're able to participate in a poll that's specifically asking if you think that it'd be a useful tool for us to have some kind of podcast version of some of the governance communications. So just drop those in there. That's it for me.
Great, thanks. Yeah, as Amy said, we'll get on to Tim and the portal in a little bit. For now, though, let's have Juan give a brief update on collateral onboarding and collateral calls, I guess. This one here. Oh, yeah.
Yes. Hello. Thanks. So yeah, yesterday we had another real world assets edition call with Bud White from Paperchain. For those that don't know Paperchain, they're also with the Centrifuge. So I guess they come after, or in line, I would say, after New Silver and Console Fright. And what they do is they do analytics on Spotify, YouTube, and other platforms. And because they're able to predict how much money these platforms are going to pay to the artist or labels, they can advance part of the revenue. So it's a really cool project for those that want to check out the talk. It's already on YouTube, and the notes are coming soon. Oh, by the way, last year they did a pilot with the Maker Foundation, so it's they already have some kind of traction. And yeah, for next week we will have set protocol. So the creators of token sets with index co-op, which, well, the set protocol is an asset management protocol in the DeFi space, and they created the DeFi Pulse index set. Many of you might already know about it. So we will have them on November 18th at 6 p.m. UTC. Yeah, that's it.
Cool. Yeah, thanks, Juan. All right, let's move on to MIPS then. Charles, you good?
Yep. Hello, everyone.
Here's permission.
All right, so this week's MIP update, we had the inclusion polls for the formally submitted proposals. There were 7 of them get proposed on Monday, and they ended as the governance call started today. And the results are that all 7 of the inclusion polls did successfully pass. And today, Long will confirm the outcome of these polls in preparation for the bundled governance, monthly governance MIPS poll on next Monday. And next week, as I just mentioned, we'll have that bundled proposal go out for the 7 proposals. Unless I am mistaken and did the math wrong for the inclusion poll tally, please correct me if I'm wrong, but this bundle poll will run for 3 days as well and end on Thursday, November 19th. And then on Thursday, we'll have Long confirm the results of that in preparation for the monthly MIPS executive vote that will go out the following Monday. So we had a couple new proposals come in to RFC this week, and the first one was the actual, it's been a pre-MIP discussion for quite some time now, and it's the proposal to have the Maker protocol cover with Nexus Mutual, and it is a declarations of intent. Second, we have the PSM created by Sam, MIP29, as Chris Mooney mentioned earlier. And lastly, we have the governance communications declarations of intent that was proposed by Tim Black. And if he is on this call and we do have time, he or any of the authors of these proposals can give a brief update on that. And then the remaining proposals in RFC that were not formally submitted for this month's governance cycle are the governance contract redesign, the DSS Gov, and the MIP17, the weekly actual debt ceiling adjustments, which may or may not be withdrawn or become obsolete as we have the instant access module going through this month for debt ceiling adjustments as well. In terms of collateral onboarding updates, the executive vote to officially onboard Wi-Fi and BAL to the Maker protocol officially passed on November 8th and was executed today. So you can now use those collateral types on Oasis Borrow. Next, we have the community Greenlight polls. They will be going out on Monday and will run until November 30th. And this month, there's only 2 of them actually. So Nexo and Wi-Fi I. And for more details, you can check out the collateral onboarding prioritization framework for all the statuses on the other collateral types that have come in over the past couple months and their prioritization score. And it was short today, but that's it.
Cool, that's all right, Charles. I think we're gonna need the time later on when we talk about the PSM stuff, so it's all good. Yeah, all right, thanks for that. Like I said, if you are the author of one of those MIPs and you want time to kind of just to discuss it in more detail on this call, let me know and I can put you in for a segment in the future.
I can do a brief update on the MIP13. We had some great comments.
Sure.
I will probably put those in the forum. It's probably easier to just keep the conversation there, but that's the update.
Cool, yeah, thanks. Right, in terms of inclusion review for the MIPs, I will confirm what Charles has said, that all the inclusion polls passed and will be included in the MIPs bundle next week. I think the closest one was the calendar exceptions, but it was still like 5,000 ahead of, yes, we're still 5,000 ahead of no, so that puts it above the inclusion threshold. Cool. All right, let's have Tim, do you want to do the new community portal kind of run through launch discussion?
Sure.
Have you got a presentation for me?
I do.
Share.
Can
Yeah.
do some screen sharing. All right. Okie doke. Oh, all right. Presentation working okay?
Yeah, not full screen. Yeah, but yep.
There we go. Cool. All right. So I'm here to talk about the community development portal. Technically speaking, the presentation is from Shay Fitzpatrick, our designer here on this screen of who built this thing, including Rajan Taylor Foster, myself, Amy, and 10 other contributors who worked since April or so. Everybody probably has their own term for what a portal is, but the community development portal specifically is a hub for hosting programs and community generated resources for improving the management, onboarding, and growth of MakerDAO. You probably wonder who it is for. We're actually currently experimenting with audiences, but the portal mainly focuses on folks who are looking to actively participate in MakerDAO or its community programs. And that usually falls into two buckets, right? People who are new with MakerDAO and want to learn about the system, but may not be like technically adept, and folks who are familiar with MakerDAO and looking for canonical specific answers or ways to engage with the community. And so originally we were in Gitbooks and GitHub pages, and we needed to migrate to something that was a little bit more fun, I'd say. So we set out some objectives, and we realized that it wasn't just Gitbooks constraints. We needed a platform that makes it friendly for contributors, content creators, and developers to collaborate. MakerDAO is global, so we had to solve for localization right out the gate. It cannot be nice to have. I'll get into that later. And we, as I said, wanted to make it visually appealing, supporting things like landing pages, specialized embeds, videos, callouts, buttons, you know, the snazzy stuff. And so the new portal was uniquely designed with a content-first approach. We actually approached a content designer who took a look at what we had originally and then restructured everything together to be a digestible format. So this is sort of a spaghetti sitemap of everything that we had, right? And there's sort of these three paths: a learn, a contribute, and a funding path, right? Learn, giving you explanations of concepts and further reading; contribute, on becoming part of the community; and funding, for applying to many of the programs that we have under community development, whether it's hackathons, meetups, or larger grants. And so it's important to talk about how it's structured, because we had to build the thing and meet Rajan, our resident mad scientist, Maximum Crash on Twitter. You can also add him on Rocket Chat. He's just Rajan. He built grants.makerdao.com for us, and then jumped onto the portal project, where he, as I mentioned, saw an outcry of concerns. They're all listed on this slide. I'll share this presentation, but basically, in a nutshell, it was difficult to collaborate, difficult to coordinate, and difficult to style. Landing pages were hard to see. I mean, it goes on and on, where we had to solve some problems. And so he built a solution, which was a quote unquote dream Git-based CMS, right? Create a low friction for making new content and adding new features, where content creators have complete control. There's a manageable skill ceiling for getting started, a little bit of a lift, but it's not too bad. We wanted to make the site way more controllable, so you can make it look however you want. And we wanted to make content portable. So that's what this solution does. And being that there are some technical people here, this is what the stack is. And Makerman asks if the site is accessible, mostly, but that's one of those things that I'd like to talk about. I'll get to that in a bit. But basically, the stack that we use is GitHub is the base, Gatsby, a React framework, DaiUI, MDX, and Lunar. And so Gatsby is great because it's geared exactly for the use case of where we were for collaboration. DaiUI connects us to the foundation for brand identity, and it also has emotion.sh for some CSS and JavaScript. MDX solves a really big problem for collaboration as sort of the bread and butter of every page. And Lunar is a static search index, which is pretty great for people whose internet is low connectivity. And Rajan built a custom translation module, which is pretty snazzy. And so the stack solves for a bunch of specific issues. It keeps GitHub as the source of truth for communication, collaboration, permissions, basically the entire history of the project. DaiUI maintains a design bridge between the foundation and the community. Gatsby's GraphQL API makes directory problems easier. If anybody's ever worked with Gitbooks, you know a summary MD file probably way too well. And MDX means that no one has to learn a new language, right? We were working entirely in Markdown, and now we have this extended format where you actually are more empowered as someone who's making a web page on our website. And so it's actually a secret sauce. This is Rajan's secret maximum crash plan to create an architecture for a silent on-ramp to turn content creators into web developers. So the more someone wants something out of a page, to put this thing here, to make this button do this, to extend to this box, the more that they become a front-end developer. So writing content starts to become writing code, knowledge becomes power. And so that's his secret plan. And we've done it with 10 people, and I'm always happy to onboard new folks. Anyway, it's important to also talk about the design because I mentioned Shay earlier on. We asked Shay to come in and establish a visual identity for community development stemming from the core maker brand, but reflecting the distinct, sort of personality of what community development is, then apply that design language to the components that we had sort of designed, and then provide designs for home and landing pages. Basically, all of our contributors, you can always find us in Rocket Chat, were asking for more humanness to the community development universe. And so she did this by user research. She just popped something into the community development channel, designed three themes, showed up at stand-ups, honed all of those, found another contributor to make characters and illustrations, and sort of pursued the idea of simple, friendly, organized, and fun. And that looks like this. So this was some of their work in progress, a light and a dark mode, some of the buttons, some of the little characters. And this is actually some of the work in progress that resulted in this. So can everybody see the website now? Does that show up?
Yes, I can see the website.
Excellent, good. Always worried that somehow Zoom will break when you need it. So now we have this actual landing page, which is like pretty rad. There are calls to action on everything. And it takes us to these different sections that we've got up in the top that I mentioned before: learn, contribute, and funding. So, I mean, I don't know what else to say, but other than just go check it out. We're always happy to have people come in and become a part of it. You can clone the repo at any time. It's just makerdao/community on GitHub. You can install the stack, and you can always hop into community development and share your feedback. We love bringing new people on board because this is for all of you. And since it's powered by that stack, it means any one of you can put up a PR with a new page. So with that, I'll stop. We're going to share a link to this in the snippets today, so you can always review this presentation as like a place for links. And if you have any questions, again, please come into community development and ask us and tell us what you like, what you don't like, what you want to add. We'd love to have you.
Perfect. Yeah, thanks, Tim. I think it's definitely like worlds better than the previous portal in terms of looks and design and functionality. So, I'm looking forward to seeing how it develops further over the next little while. Anyone have any comments or questions I want to ask Tim about the portal?
So I just wanted to reiterate. So, my wife's visually disabled, and so she would love to contribute somehow. I was kind of curious, are these models going to eventually incorporate something like that?
Yeah, since it's all Git based, like it's really open to contributors, and we would love to make it more disability friendly. My partner is deaf, so I'm always thinking about disability readers and people who use websites in different ways. So that would be awesome. We would love that contribution.
I mean, do you guys actually want a visually disabled person to come in and help, and you know what I'm saying, like to contribute? My wife would love to do some work.
Yeah,
and it sounds like it'd be fun.
Yeah, that sums it up pretty well. It would be. Please.
All right. Cool. If there's no more questions or comments for Tim, I think we'll move on. Yeah, Sam, do you want to kind of do a brief discussion of the PSM stuff and how things are going?
Yeah, sure. So basically, at the beginning of this week, I wrote an implementation of the PEG stability module. I originally sort of had the intention of just going through the monthly governance cycle like normal, but a few days later, I kind of realized that we may be able to kill a bunch of birds with one stone, basically, in that we're continuing to have trouble with the DAI peg being at, 1.01 now. It's pretty steady there. It's better than it has been, but it's still not quite good enough. And so in my view, we're kind of in this worst of both worlds situation where we have massive stablecoin exposure, but DAI is still not quite at $1. So I'm of the opinion we should just sort of take that final step, and whether our USDC exposure goes up to 100 or 1,000 million. It's at 500 million right now, roughly. If it goes up to 1,000 million, like it's, you know, it's roughly the same. Like if USDC goes down, we're sunk either way. So might as well solve the peg issues, because we're hearing from users, like people in Latin America and integrators, that they are abandoning DAI and going with USDC instead, just because of these sort of volatility and peg issues. So the issue kind of with just sort of like say we go with the current solution and just sort of lower, say, USDC-A down to like 100.1% collateralization ratio. We were running into this problem before where there was this specter of liquidations that we would have to deal with eventually, and timing and stuff like that, like running the stability fee such that we only collect up to about 100% collateralization, this kind of stuff. So I think the PSM here is a really nice fit to sort of solve all these problems at once, and that we can run the PSM with a 0.1% fee and gradually move it down so that we can basically collect all the fees owed to the protocol, and then at the same time bring the peg in line to within 0.999 to 1.001. It will constrain it to that degree. So basically this is like sort of a short-term stopgap. It's definitely, I don't view this as something we should lean on in the long term. We should definitely be getting real world assets on board and stuff like that to get some sort of better supply in place. But for the time being, I think it makes sense to, you know, just get the peg in line, get users using DAI, and we'll, you know, continue pushing for real world assets and farm tokens and whatnot as we go. So I've made a proposal to accelerate the PSM launch, basically not using the monthly process, because that would mean launch maybe by the beginning of next year, which is a little bit too slow. I think we can do it by the end of the month, ish, and then we can get all the stablecoin vaults to switch over of their own free will, and the ones that are left over, we have some tricks to maybe get those to bump over as well. So we can probably avoid most of the liquidation issues, collect all the fees, and have a nice pool of DAI to USDC and other stablecoin liquidity. I think it's just a win-win-win. So yeah, anybody got questions about that? Want to talk about it?
Great work, Sam.
Thanks.
Yeah, anyone feel free to jump in with thoughts. I know previously when we had so maybe I should go into the history a little bit. So previously when we had the PSM discussion and we had a PSM poll, the poll ended up failing with quite close. I think it was like 55% to 45% or something. And that poll took place subsequent to the Maker Foundation saying that they couldn't work on it. So potentially that's the reason people just kind of decided to vote it down, right? But that does mean that potentially this is still a controversial issue. I know there were several people who kind of spoke out against the PSM previously. Do any of those people kind of want to make any points now, or
Well, I would say that the points raised against the PSM at the time probably largely still stand today. I don't think that much has changed in that regard. I think the main change has been that we've been running a policy which is effectively quite similar to, or in some ways similar to PSM, at least in the way that it gives us stablecoin exposure in the form of low liquidation ratio USDC vaults. That's probably the biggest kind of change in the landscape since that earlier discussion of those objections. I would also just want to add that At the time, PSM was being proposed as an emergency measure that would go through a very accelerated process, and specifically the poll was about whether the PSM should be implemented as an emergency measure. So I think, including myself, many people's objection to it was that it's something that required further thought and it wasn't completely obvious and it should be pushed through immediately.
Yeah, with regards to sort of the emergency measure, I don't think it's an emergency, but we should be considering this within the next few weeks, because as we speak, the stablecoin vaults, they're all ticking down. I believe, what was it? Last I checked, they're at about 100.42% collateralization, and every 10 days they tick down by another 0.1%. So we want people to naturally unwind their positions. We're going to need to go forward with this sooner rather than later, or shut off the stability fees or something.
Sam, I have a question, and I'm not totally familiar with all the mechanics of how this actually works, but I get the first order thinking about why this is useful. Can you go through like what would potentially be like the second order thinking of like how we get out of it, or what consequences might, like unintended consequences that might show up when we try to unwind it, or do we need to unwind it?
Yeah, so basically on this side, it's somewhat similar to the 101% liquidation ratio USDCA vaults. The nice part is because it's pooling all the USDC and it's open to the market at large, as soon as we drop down below the lower end of the T out parameter, so in this case, if we go with 0.1%, it would be 0.999. As soon as DAI drops trading below 0.999 against USDC, the market will arbitrage that out immediately. And so we don't have this unwinding problem. Basically, as soon as we start getting a excess supply again, it will just bottom out at 0.999, and we will unwind the debt as fast as people are minting DAI, basically. Does that answer your question?
To an extent. I'm more just concerned about like it's always the law of unintended consequences, so just if Ethereum tomorrow, hallelujah, hit 5,000 and folks, minted, I don't know, another 200 million of DAI, if we had a debt ceiling for that, is there some other unintended consequences where if the price of DAI then hit those numbers, it's the what happens if with other scenarios? And I don't have my head totally around it, completely not. So I'm just looking for insight from anybody.
So it would be an immediate sort of buffer against supply shock, like in a very short term. But as we unwind the PSM, once it hits zero, we will have to go back to relying on stability fees and stuff like that to keep the price up.
Hey guys, so I've been thinking about the peg a lot and the whole USDC thing. I've had a lot of posts. I really wanted to be more prepared to talk about this because there's a lot of issues that factor in here with related to perception of DAI and risk and kind of what you think about all this. But when I looked at what's happening with the USDC vault, as long as you have DC and you're willing to give up on fees somewhere, like if we want to peg to USDC, you kind of don't care, really. Like what's the risk then? We've already assumed the blacklisting risk. Is there a risk that USDC, like I posted saying on this whole PSM thing and how we think about this, we've OSM these things to 1. And when you do that, if the real value moves around that, let's say it goes to let's say USDC goes to 0.985. Even in this PSM thing, the USDC you're holding and giving DAI out for, you're kind of giving DAI out potentially at a higher value in USDC against the USDC against the USD value of the USDC. And so there's like some hazard here I'm trying to sort out, and I've been writing an article on this, and it's leading me to other ideas that I think look really good for Maker. And so it comes back to, do we give up on the fees on this to get peg management? And I don't have the answer to that. I've just been trying to work up the ideas, and if I had any solution, I'd say, let's pause the dang SF here so we can buy us some time to figure out how we want to navigate out of it. Beyond that, we've already assumed the risk hazards. It's just, do we want to grow them or not before we can find our way out? And do we want to push through with something that could have a little more thought? And I'm just trying to get the time together, because there's so many things I'm doing, but this is a complicated issue to sort out, and it's leading me to some interesting ideas that I wanted to reveal in forum posts. I just haven't got to it yet, and so you're pushing this, and I'm just about to post some stuff, and I just haven't got there yet.
Yeah,
So-
please go ahead and post. Go ahead, whoever that was.
Yeah, so we can always, make an actual, floating, price, right? Like we can always create an oracle for the stable coins. But right now, I just don't see a good reason to do so, right? Like it should be binary, right? Like either there is money backing USDC or there is not. Right? So you either have the redeemability guarantee or you don't. If we were to have, right, a floating stablecoin price, people wouldn't be nearly as comfortable taking the amount of leverage that we're seeing, right, which could have destabilizing effects on the peg, right? Because right now, with very little money, you can get a bunch of leverage, right, and just hammer the thing back down to $1.01. Right? But you can only do that because of the confidence that people have to not get liquidated, right? Now that's not exactly true, because some people kind of abandon their position afterwards, right? They've made their money on the initial sale, and then they kind of just never look back on that existing position. But that's a bit irrational, right? Because basically they're still retaining this put option on DAI that they otherwise, in a floating world, potentially could not hold on to. If the goal is to, which I very much still believe is the case, if the goal is to, onboard more stablecoins, to protect the peg, I don't see how adding an actual floating oracle for stablecoins would help in that regard. Now, if our approach to fiat-backed stablecoin changes, right, and we can protect the peg in other ways, then the situation changes, right? Then we can take a look.
Yeah, one other thing I just want to reiterate is that sort of I view this as a temporary solution to retain users that we're losing in Latin America and integrators and stuff like that we're hearing again and again that they are abandoning DAI. So it doesn't matter if we have the most decentralized, best stablecoin in the world. If there's no users, that's a serious problem. So this is not my ideal situation. I'd rather have real world assets, highly diversified, farm tokens, all these kinds of things, right? But for now, I think getting the peg in line is priority one, and it's up to us to just sort of backfill that supply as we get it done.
I've got to go in a second, but I wanted to just sort of add, also echoing what Sam just said. I think maybe it was clear from last time, was not a huge fan of the PSM. So I think it creates a kind of, that empty shelf situation, and we're talking about narrowing the band of the PSM right to the empty shelves standpoint. But I think at this point, the risk of losing users that apparently don't care about decentralization of DAI is probably worse. I think it's worth everyone sort of looking through Lix's arguments. He does arbitrage around the DAI peg, and we are going to sort of remove the market for people that'll create vaults in order to mint DAI, in order to take advantage of an arbitrage. And maybe that's okay. That's fine. And then I wanted to add one other thing. This implementation that Sam is discussing, I think, and maybe this other smart contracts guy should think about this, but I think this might also make it so we could effectively take any liquidated positions that we have currently, or that would be liquidated in USDCA and PAX USDA, TUSDA. We could take those once they got really close to that sort of $1 mark, before they were completely under collateralized. and I think we could actually sweep them into the PSM, which means rather than liquidating them, we kind of, could move them into the PSM, and as a result, they'd just be available for the market whenever, DAI price drop below $1, people just be able to sort of pick it up, and then we don't have the liquidation problem. And if we did that periodically, it would allow the existing USDCA or other vaults to continue to function, and directly sweep things out, so you get to collect the sort of fees on those USDCA and other collateral types. But I have to think about that sort of fork of the vault over and whether or not that would mess up the implementation of the PSM. But yeah, and that's it. I've got to go to another meeting.
I just want to chime in here too that it was mentioned earlier on this call that the foundation can't help out with this, which means that you don't have the benefit of the smart contracts team reviewing and auditing this code. I would strongly suggest that the community seek out audits, or find trusted people that can audit this code so that they feel comfortable with it before rushing this into the system.
Yeah, I second that.
And keep in mind, right, that the audit doesn't need to be free, right? Like the fees can come from the stability fee buffer, right? We do have functionality to pull DAI out of there. You just need to kind of make sure that whatever auditor you choose is willing to accept DAI or crypto or something.
Yeah, but getting an audit right now is like a 2021 event, right? Isn't everyone just backed up to the tilt?
There's always ways to cut the line, depending on who you know.
Okay, good.
Yeah, one thing I'll say about the code though, from a security perspective, I'm just finishing sort of a bit of a rewrite of it, but basically it's going to be exactly like a collateral type with a single permissioned vault. So it's really using existing systems. There's not a whole lot of risk. Definitely look at it, but just on a scale of crazy risky new thing to not that risky at all, I think it's a pretty tame addition, and there's not much risk in my opinion.
Yeah, it's basically a USDC vault with LR of 100 and an upfront fee, right?
Yeah, exactly.
I'd like to mention another stablecoin related proposal that's coming shortly that I think has been discussed in some forms before, but the main idea is looking at ways to deploy the current, essentially finding ways to deploy Maker's current stablecoin exposure into farming in DeFi that would allow Maker to capture farming yields that have actually been the root cause of the overwhelming DeFi demand this year. In order to kind of be more fairly compensated for the stablecoin exposure that we're taking on, and in addition to that, potentially avoid using kind of PSM or super low liquidation ratio type mechanisms that kind of have these unwinding barriers. So for that, we've been working on a collateral adapter that would, that in theory is applicable to all or most DeFi kind of farming mechanisms, but particularly initially looking at proposing it for farming USDC on Compound. And the reason for that is because it offers actually a very attractive rate of return once you factor in the levers that you can get from the CDP, and in addition to that, targets the same asset that we have most of our stablecoin exposure in currently, which is USDC, So essentially looking at trying to potentially swap out our current kind of 101% liquidation ratio USDC exposure to something like, let's say, 110% liquidation ratio USDC farmed USDC exposure that can collect, kind of a debt ceiling, collect a stability fee in the kind of high single or low double digits, while also offering a really attractive yield opportunity to the market, which would, increase the chances that it would be used significantly. So I'll put in the chat now a link to the proposed implementation of this. And kind of coming soon, I would like to make a post in the forum that proposes this as a to onboard this as collateral. But I thought this would be a good time to discuss it. Oh yeah, there's the link now.
Yeah, I definitely second this, and this should be the type of thing we prioritize with the PSM as a fallback. This is the type of DAI supply that we want with Lev stuff.
Yeah, I wanted to say I was analyzing this in conjunction with the PEG and everything. We totally want to do this. It's a win-win in so many ways.
Maybe you can speak, Lev, to the types of APR that can come from this and potentially the stability fees that we could charge for this.
Yeah, exactly. So I can just kind of really quickly run through the numbers, which is also interesting maybe on the risk side for what this would look like. Note that all the numbers I'm going to say now are, within the last few days, fairly realistic, but just for simplifying the, kind of mental computations, I'm sort of rounding them. So, right now, if you go to Compound and you supply USDC, if you just do that in a naive way, you don't end up actually, you don't actually end up getting an amazing yield. But if you do it in a slightly more clever way, which you do by supplying USDC and then borrowing it and then supplying it again, then you actually maximize your comp yield, because comp yield is distributed both for supplying and for borrowing, and also that way you can really jack up how much you're borrowing without actually taking on any extra price risk, right? Because you still have the same kind of netted out USDC exposure. So if you do that, you can probably earn upwards of 15% APY on the USDC that you've actually supplied. Now, if on top of that, if you can actually take this kind of recycled compound position and put it into a maker CDP, which of course today it's not possible, but if this collateral adapter was to be on board, it will be possible. Let's say maker supports a liquidation ratio of 110% for this collateral type, which from our perspective, we're essentially taking on USDC exposure with a little bit of compound exposure, but in a lot of ways it's much more attractive for us where we don't have these super low liquidation ratio collateral types that are hard to actually offload and still collect fees on, as we've found. So if we add this thing with 110% liquidation ratio, that's essentially going to give the user up to 11x leverage on compound USDC, so they can multiply their yield by 11x. Now, obviously, we're also going to charge a stability fee, and let's say we charge a pretty aggressive stability fee of 10%, right? And we're assuming that you can get 15% from the recycled comp yield. So once you subtract those two out, you get carry of about 5%. But then, thanks to the leverage that you get from Maker, you can then jack that up by 11x, right? So you actually end up with 55% APY on this trade. So the idea is that that's way higher than almost anything that you can get in DeFi these days, and this is certainly a pretty low risk thing as far as they go, both from a smart contract and kind of price risk perspective. So it's very likely that we would be able to basically saturate any debt ceiling that we could set with this. And at the same time, we collect about 10% in that example stability fee on our exposure, which is kind of way more than we're currently able to make on USDC, if at all, right? Because of all these issues with offloading and collecting fees on this collateral. We can still have liquidations disabled for this collateral type, but with a 110% liquidation ratio, we can easily collect a 10% stability fee for a year before worrying about how to liquidate it. By that point, improvements to the liquidation mechanism, like liquidations 2.0 and so on, are likely to be in place. So that's the basic idea of the economics of this, which I think just makes this very, very appealing. And the other thing is what's nice is that this directly kind of addresses the root of the problem, right? Which is that farming has created all this demand for DAI, which we're kind of forced to deal with and carry the risk, but never actually get rewarded for. In this case, we're actually kind of, we're directly taking a piece of the farming action while generating loads of DAI that we're actually charging interest on, essentially splitting the profit with the farmers.
And also, I think as another point, I believe this would reduce demand for DAI within Compound because USDC would become the dominant market. Is that correct? Do you think that would happen?
Yes, that's correct. So there's a subtlety to the Compound reward formula, but indeed, if you actually tilt the scales in favor of a different asset, which I think this almost certainly would, because we would add this for USDC, for example, but we would not add this for DAI, right? So adding this for DAI would not be as attractive for us because we would still be sucking up all this DAI ultimately into Compound and not solving the actual, the problem with DAI supply. But if we tilt the scales in favor of USDC, then actually the DAI yield on Compound will go down relative to USDC, which would kind of have a second order effect, which is also beneficial.
Lev, same question I asked before with Sam. What's the unintended consequence? What happens? What's the negative impact that you can see that this might cause?
Well, firstly, we have to consider what is the difference in risk profile. Because I think we have to consider the situation in relative terms compared to what the alternatives are. Alternatives being the status quo, which is very high USDC exposure via this collateral type that we're using now, or PSM, and so on. And I think that from the price risk perspective, we still have just USDC exposure, right? So we're not putting any sort of riskier assets on the balance sheet. But we do have two new risks I think introduced from this. One is obviously the technical risk of both this specific integration and also Compound in general, the platform. And the second risk is Compound solvency risk, which is that when you have a claim on USDC or any other asset in Compound, then it's not strictly equivalent to that underlying asset because Compound you actually have to withdraw it from Compound, and it's possible for Compound to be in a state where it can't be withdrawn, either because Compound is illiquid because they might just have lent that asset out and don't have it in the system to give to you, or because it's actually insolvent, which would happen if positions went underwater and collateral wasn't actually enough to recover the value of the loans. So basically, to summarize, we're adding some smart contract risk and we're adding Compound solvency risk, and those things we have to keep in mind as we set the debt ceiling for this thing. I think it's reasonable on smart contract side to mitigate that by starting with lower debts and improving the concept, getting third-party audits on this code, and then I think on the Compound exposure side, it's a more subtle question about the risk team and the community's attitude towards Compound risk. Unfortunately, we've sort of been exposed to risk coming from other platforms as we've seen this year with DeFi. Whether we like it or not, and we've been kind of very good at having these emergency situations because of what's going on in other places. This kind of addresses it a bit more head on. It's also worth noting that we don't know how Compound governance will manage comp rewards in the future, so it's impossible to predict what comp yields would be in the future. It depends not only on the market but also on their governance. We also don't know how Compound governance would react specifically to this integration. I mean, there's been plenty of other DeFi protocols that have variously used integrated comp farming. So I don't think anything about this proposal is really unprecedented. Aside from the fact that we're actually doing primary issuance of DAI against a yielding a farming asset, which is something that we've never done before. But I think those are kind of big unknowns. But I don't see those as sources of risk so much as reasons why the landscape may change in the future and potentially change the effectiveness of this plan.
One other thing I'd like to point out, I think this is a pretty serious game changer in my opinion. Not only about this specific USDC and compound, is that this sort of concept can generalize to most farming situations, or at least a lot. And we can sort of get these high leverage stablecoin farming with high stability fees in place pretty much wherever farming is available and permissionless and all that. I think this is pretty huge.
Cool. Unless you have something valuable to add, Lev, maybe we should move on. Have to get to stay at the peg if possible. But yeah, I would sort of, I'm kind of looking forward to seeing this proposal on the forum so I can understand how it works. But yeah, it does sound potentially awesome.
Yeah, okay, see you on the forum then.
Cool, great. All right, Rajesh, do you want to stay at the peg quickly before we finish for the day?
Sure.
There you go.
All right. So to summarize, we're sitting at about 990 to 993 million total DAI issued. Still about 378 million of that is from ETH, and then you got a solid 1.2 mil from ETH-B, about 3 mil from BAT, 411 mil from USDC, 109 from WBTC, 57 million from TUSD, smaller amounts from ZRX and Mana, 21 million from PAX, smaller amounts from USDT, Comp, LRC, and then 5.1 million from Link. So just in terms of where we are with the DAI peg, so lately this has been trading pretty consistently around $1, with some volatility in the last week or so, both above and below peg, or both above and below the equilibrium price right now, and that a lot of those trades have been occurring on Uniswap v2, so we've seen that kind of dominate the share of volume lately, and then there are some trades as well on DYDX that kind of stay centered around the median point of those trades. So right now what we've seen is moments where large trades will experience slippage on Uniswap, but in both directions, and so that's where you see kind of this bias for some of the larger circles, both above and below the line, and then a pretty tight grouping of smaller circles like right on the line. So there was some fluctuation with large movements in ETH and other asset prices in DeFi, but by and large it did hold pretty consistently steady. So in terms of some of these vaults, so for USDCA, being the largest bucket, we have a debt ceiling of 485 million on that right now, with 411 million issued. So as you can see, the largest chunk of this 272 million is pretty much smack dab 100% collateralized, and then 116 million is collateralized at 101% or higher, and then smaller amounts at higher collateralization ratios. So if we look at the amount of projected DAI that would be liquidated at a price of say $1, so that's basically everything that currently is able to be liquidated. If liquidations were enabled, that was about 380 million DAI. So basically the majority chunk of the USDC portfolio. So you can see the the largest few positions have not really been touched since September. And those are sitting, they're basically 340 million vaults that have been sitting. And then we've got the fourth largest vault at 22 million. That was touched in the last 2 days, and that one is sitting at 101% collateralization ratio. So this is basically the trend you see is the ones that have been updated more recently by the vault owner. Those tend to be the ones that have a slightly higher collateralization ratio, which makes a lot of sense because basically the collateralization of these vault positions has been decaying primarily due to just accrual of fees. So as well, to touch on just real quick, so the peg from a USDC trade standpoint basically echoes what's been going on with the implied ETH DAI price, and then same with the DAI USD peg with a bit more volatility, and then again DAI USDT looking a lot like DAI USDC but with lighter volumes. So yeah, so some of these larger vault positions, we go to ETH. So you can see basically, you know, the largest bucket of collateralization being 77 million of that DAI is 220% collateralized. And then some of the individual larger vault positions are like 270 to 280% collateralized, with a collective 100 million or so in that 20 percentage point range. So by and large, the ETH portfolio positions are a bit more collateralized, which can be attributed, I think, primarily due to the nominal increase in ETH USD value, though some of these vaults, you know, are updated a bit more regularly. I mean, we had the largest position was touched a day ago, and then the smaller positions there basically in the last week. So these positions tend to stay a bit more current, and there is a nice sort of distribution to the collateralization ratios amongst the vaults. It's not like the entire ETH DAI portfolio is grouped up into 2 or 3 large vaults, which is good. That distribution tends to keep the debt portfolio and that collateral asset a bit more fresh, you might say. Another huge chunk of the DAI portfolio is WBTC. So what we see basically is, you know, the vast majority of the WBTC positions are like 190% collateralized or so, which is a bit less. But, you know, again, there's that discussion around, is WBTC really that much more market volatile? And I think, you know, generally the consensus is no. So basically you have, you know, an 85 million liquidation wall there at 11.9K price, and then, you know, 84 million or so. Well, actually, if you expand this to the top 3, like 93 million of that is living the largest 3 vault positions, which are 190, and 280% collateralized respectively. So that's, I think, a pretty solid collateralization ratio for those 3 largest WBTC positions. Another large component of the portfolio is Pax USD with 21 million, which basically, again, lives in the 3 largest vaults. And, you know, you can see that basically the entire portfolio is collateralized between 100 and 101% collateralization ratio. So this is a very similar scenario to the USDC positions. You see kind of a meme in the Pax vaults at around 106% in terms of 100.6% in terms of averages, and the USDC positions, those had decayed to around 104, 105%, 100.5% collateralization. So that clock continues to tick, shall we say. And then, yeah, just in terms of where a lot of that DAI is living. So, you know, we touch on the basically 360 million in Compound, 200 million in Uniswap pool, another 32 in one of the largest curve pools. There's some farming pools like Barnbridge and the Yiffy pools, which contain smaller amounts around 20 million apiece. And then the Aave pools around 17 million. And yeah, these curve positions are fragmented a bit into multiple pools. But basically, you know, as we touched on last week, you have at least 600-700 million of the DAI that's outstanding that is in liquidity pools or farming opportunities. So I think the community pretty much is aware that that's kind of the current state of the DAI portfolio. Overall, the outstanding amount of DAI did tick up a little bit. So, you know, you could see this cross that meme mark very shortly. Kind of depends on what happens with the stablecoin vaults. Okay, I will pause there. I'm happy to double click on specific things if people have questions they want to zoom in on.
All right, thanks for Shesh. I'm getting close to past, so if anybody does have any questions, I would suggest making them quickish. Cool, yeah, that's a good question, Jose. So Jose asked if there's going to be a Thanksgiving call. So that's 2 weeks from now, I think, is Thanksgiving. That's the Thursday. I think we're probably just going to skip the call for Thanksgiving, given that many of the people who usually attend are going to be on holiday. If anybody objects strongly to that, I guess let me know in the next 2 weeks, and maybe we'll reconsider. But I think it's probably best to assume that there isn't going to be one that week. Okay. Cool. I think we'll leave it there then. Does anyone have any final points or reminders they want to share before we close up?
Long, maybe to end the call on a positive note, something that I think Sam said about projects not accepting DAI because of the out of peg situation. I don't know. I don't know if I fully agree with the statement that the peg is out of control. I think that it's within a range, and maybe coming from Argentina, I would say that if the DAI is worth more than $1, it's because maybe it is more valuable than $1. And I'm not saying that we should stop doing things to maintain the peg. And I think that all these tools are great. And we should definitely consider them and work on them. I think they're very valuable. But I don't know if I agree with the statement that these projects are not taking DAI because of that and whatnot. But yeah, just I wanted to finish on a more positive note. I don't know if I managed to convey that.
That's okay. Yeah, I think it's important to have like the other side right as well. Sorry, we'll leave it there. Discussion should continue in the forum, right, about the PSM. I linked a couple of threads previously. Maybe Sam can link the signal request again. That's probably the best place for discussion. I think the signal I think, what day do we say it ends? Was it the 18th? Or the
Next Friday.
Next Friday, the 20th, that's right. Yeah, so there's just over a week to kind of vote on that, and kind of to make your case for either side. So please, if you do feel strongly about it, leave a comment and try and kind of explain why to everyone else. Right, I think we should wrap up there then. Thanks everyone for coming, and I will see you all next week. Thanks, guys.